And I think also with the fact that there has been a slight downturn, the fact that uh, the last month has been difficult for Bitcoin and crypto assets does beg the question, where do we go from here? But also, is there something fundamentally driving this? And we would say, the hack, the Bybit hack is not a reflection, particularly for Bitcoin, not a reflection of its fundamentals, right? The fundamentals for Bitcoin still remain very much intact. Bitcoin is still the only scarce asset, the only limited asset in the world, the only truly limited asset. And as a result, we still believe the narrative of it being an emerging store of value definitely still holds true. So nothing has been actually infringed upon in terms of what Bitcoin stands for. And I think that's still quite important. And when we looked at the last month, Michael and I noticed a trend, of course, that Bitcoin had been struggling, whereas actually gold had been reaching continuous new all-time highs. And that's why we wanted to cover these two assets. We think Bitcoin is still very much like gold. We always like to say, if you like gold, you probably like Bitcoin, but you just don't know it yet, or you're already allocated. And the reason for that, I would say, is because firstly, of course, it's a scarce asset, it's limited in supply, but also because Bitcoin, not only is it like gold in its fundamentals, but it's also improving upon a lot of the drawbacks that gold has. So Bitcoin is easily transferable, so it can send easily via you like sending an email. It's easily storable. You can store it on a USB stick, or you can invest in it via ETPs or ETFs. Whereas for physically storing gold, it's expensive and it's difficult to transfer. And again, while it's also difficult to do this, gold is still subject to counterfeit. I'm not sure if you guys have been following the story of Fort Knox and the fact that they want to go there and check that all the gold bars still exist in Fort Knox. But there are concerns, or there are rumors circulating that some of these bars may actually be counterfeit. And this problem does not exist with something like Bitcoin. So I think it's still worth doing this kind of comparison because we see institutional adoption pick up. We see it from, as Michael mentioned, from the ETFs, from potentially institutional adoption via basis trading. But we also see institutions invest in Bitcoin potentially as a strategic reserve asset. We've seen Strategy continue to ramp up their adoption for this very reason. And of course, in the US, we still have over 20 different strategic Bitcoin reserve bills open at the state level. And that's particularly and precisely because of this core proposition that Bitcoin is an emerging store of value. And Michael, I say emerging for a very specific reason, I think, because some people here might be thinking I'm a bit crazy. Bitcoin still suffers significant volatility compared to gold. But I think you found an interesting angle, which I'd be happy for you to share.
Yeah, absolutely, Max. And I think for gold, you have to look back to 1970, right? When the US removed the gold standard kind of from our pegging of the dollar. And for the years that preceded that, it was quite a volatile asset. I think it was probably 40 or 50 vol asset, similar to where Bitcoin is trading today. And that's something to really keep in mind as Bitcoin is also just a nascent asset, similar to what happened to gold then, as there was no real proven use case at the time other than it being this reserve asset for the dollar and dollar pegging.
Exactly. As we also transition to more of a digital world, having something like Bitcoin, the benefits of having something like Bitcoin will become more and more apparent. And as the asset continues to mature and as more market participants buy into this idea of it being like digital gold, we will see that volatility come down significantly over time. But I think for people here in the call, they are obviously interested. Does that mean Bitcoin should replace gold in my portfolio allocation? Does that mean they can both play the role together? And what do you think, Michael?
Yeah, I don't think that's our view at all. I think they're quite complementary assets held in the portfolio together, right? When you look at the two of them, obviously the correlation between the two is extremely low at 3%, but even their correlations to equities and US bonds are also extremely low. And this provides that nice diversification that investors are looking for when they're trying to diversify away some risk to the markets more broadly.